Hi guys, so welcome to another episode on Forex trading. So we're still on topic Forex trading. Forex trading. So on the first episode, we shall explain the introduction to Forex trading and some other key concepts of Forex trading. So this episode, I want to talking about how Forex trading works and also type of Forex trader. This is what I'm talking on today episode. This is the episode 2. So if you are just seeing this video, go and watch the episode 1 so that you can follow all the videos stage by stage so that you understand everything concerning Forex trading, which I told you guys that this particular course that I'm doing here on my YouTube channel will be from the beginner stage and also to the advanced stage. And also if this content, if this video is helpful to you, you can also click on the subscribe button, share it to your friends or loved ones, because I'll be dropping the video on my YouTube page, my Facebook page, and also my TikTok page, so you can go and watch the video and any of these pages at ZM Strategy. So remember to click on the subscribe button, follow and like, and drop your comments for questions and all that. So before wasting you guys time, so today I want to talk about, like I said before, one which I was talking about our Forex trading work. That is one. Then 2, I want to talk about types of Forex traders. Type of Forex traders 2. So inside this how Forex trading works, type of Forex traders, there are subtopic here and subtopic here. So let's start with how Forex trading works. So inside this how Forex trading works, I'm going to talk about the technical aspect of it and also the fundamental aspect of it, which is I'm going to talk about the market analysis. I'm talking about placing of trade and also managing your risk. So these are the things which is I'll talk about, which is the market analysis aspect of it, which is let's say 1A, talking about market analysis. 1B. So inside this number 1, talk about market analysis. I'm talking about placing trade. Then 1C. So 1A, 1B, 1C. So inside still on this how Forex trading works, placing trade, and still going to talk about managing risk, which is how you can manage your risk. So these are the things I'm going to talk about inside this how Forex trading work. So let's start with market analysis. So I want you guys to follow me. So let's start with number 1, which is 1A, market analysis. So inside this market analysis, that is where we have the technical aspect of it, which is technical analysis. We have technical analysis. We also have the fundamental analysis. We also have the fundamental analysis. We have the technical analysis. We also have the fundamental analysis. So let's start with the technical analysis. Now, what is technical analysis? Now, what is technical analysis? Now, like I said before, we have so many different definitions of all these things, technical analysis, Forex and all that. But let me give you guys an easy definition so that you guys can quickly understand what is technical analysis. Now, technical analysis is simply means analyzing price chart using. Now, when we're talking about technical analysis, is whereby a trader analyze analyze the current market, like the current data that we are seeing in the market by now most trader when it comes to technical analysis, some trader usually make use of indicator. Some make use of like indicator, like we're talking about the moving average, the RSI. Some do make use of Mandi. Some do make use of like different things to predict the market, the market. And also we also have price action, which also inside technical analysis by analyzing the market based on what you are seeing. Now this time around, we are not using indicator like moving average, RXI, Bodega band. There are so many indicators now. We are not using indicators because most of those indicators they do depend, like which is how would I put it past? They do depend, like you will not understand, but maybe when we go further, you understand what I mean. Like they do repent, like those indicators there. So that's why we don't actually make use of indicator. But what we really do is that we focus more on price action, which is the technical aspect of it that we are doing, which is the technical aspect of it. We focus more on price action. Price action in the sense that we are more focusing on what is currently happening in the market, like the recent data. That's our focus. We can use the recent data to compare the previous data and see what is market likely to do at that particular time. So this is just the beginning aspect of it. When we have gone to the advanced aspect of it, you see how we usually do our technical analysis by analyzing the market based on the current data we are seeing, and also compare it with the previous data at that particular time. So that just technical analysis. The technical analysis just by you open your chart. Open, maybe example, you are trading GBP USD. You open the GBP USD chart and you start analyzing your market, look price action, what is currently happening, what is market like, those technical aspect of it, like analyze the market, technical. That's what I mean by technical analysis. Then, yeah, we also have the fundamental analysis. We also have the fundamental analysis. Now, what is fundamental analysis? Now, fundamental analysis is simply evaluating economics data. Now, in fundamental analysis, we have what we call interest rate, we have what we call GDP, we have what we call unemployment. Now, this new event that I just mentioned, interest rate, GDP, unemployment, and so on and so on. Now, these are political data, or these are information development that could affect the currency value at that particular time. Because if for example US are announcing the unemployment rate and maybe the interest rate, for example, and if what they announce is kind of negative to the economy, definitely is going to affect dollar at that particular time, because the news is let me say is negative to dollar at that particular time. So since news is negative, definitely it's going to affect USD at that particular time. So we have different type of economic events or news. Like I said, if we have GDP, we have unemployment rate, we have interest rate, we also have non-farm whatsoever, which now has the NFP and so many other news. So these are the fundamental aspects of analysis, and we also have the sentimental aspect of analysis, which I don't usually use, so that's why I don't put it there. But let me explain the sentimental aspect of it. Now, the sentimental aspect of it is that whereby if Mr. A is saying Forex, is saying GDP, or is saying that maybe GDP is going to buy at this particular level, Then Mr. B is saying that dollar is going to sell at this particular level. Now the sentimental aspect of it is that is by you comparing this guy and this guy with based on the previous data, and based on this guy previous data you can be able to decide, okay, let me work with this information. Because if you see, if you maybe for example, let's say US president Donald Trump, for example, is saying that dollar is going to sell from here, and maybe Elon Musk is saying that GBP is going to buy from here. Now, based on the influence of Donald Trump and based on the influence of Elon Musk, you can be able to decide that, okay, let me follow this. That is the mental aspect of it, by you comparing what people are saying in the market for you to decide what different people are saying in the market. This is what this person is saying, this is what the person is saying, so let me work with this. That is the sentimental aspect of forex trading. So let's move. So I'm talking about market analysis. So next of which I want to be talking is placing trade. Is placing trade. Placing trade. Now, we have different ways you can place trade on the forex market. Now, we make use of MT5. And we make use of MT5. We also make use of MT4. There are some other trading platform like C-Trade, also there are so many different ways to place trade on the forex market, which is you need to connect your broker to this, your broker to this in order for you to place trade. So which maybe on our next episode I'm talking about broker, so that you understand broker, how broker work and all that. Now let's talk about placing trade. Now you can place trade in different way. You can place trade using what you call market order. You can place trade what we call market order. You can also place trade in what we call a limit order. Use is these two things here, which we call the market execution and also limit order. So these are the two basic things I make use of while placing my trade. Now let me explain market order. Market order. Now, what is market order? Or we can call it market execution. Now, what is market order, or what is market execution? Now, market order simply means buy or sell currency pair immediately at the current market price. You get? So market order simply means that, or market execution simply means that you want to sell this particular currency at this particular time, this particular seconds. Like you want to sell or buy this particular currency immediately. You want to sell this particular currency, or you want to buy this particular currency like this, like you want to, like the market should execute trade now. That is market order. You want the trade to be executed immediately. That is what they mean about market order. Then when we come to limit order, now with the word you will understand what they mean by limit order. Now limit order simply means that set a specific price at which you want to buy or sell a particular currency. Now the order is executed only if the market reach that price. Now understand it. Now there is an if. Only if the market reach that particular price that you have set. Now you understand what we mean by limit. Limit order simply means that, okay, I want to buy good, but I don't want to buy good at this level. I want good to sell down to this level for me to buy good. Now I've set my limit. Now that limit can only execute if go drop from year to year. You get the point. So and also maybe I want to sell GBP, but I don't want to sell GBP at this level. I want GBP to buy to this level for me to sell GBP down. That execution can only execute if market get to that price level that I've said for GBP to execute. Now we also have a stop loss order and also take profit order. So stop loss order, we also have a what we call stop loss. We also have what we call stop loss order. We also have take profit. Order. We have stop loss order and we also have take profit order. Now, what is stop loss order? Now, stop loss order simply means that you set a price at which your trade will automatically close to prevent further loss. Now, stop loss simply means that now Forex, like I said before, Forex is a business whereby you have full control to control your resources in the Forex market. You can take a buy trade and you can be able to say, okay, I don't want to lose more than $10 on this particular trade, so let me set my stop loss at this particular level. It simply means that when market get to this particular level, you are going to lose just $10 because why? You have set your stop loss. Now that's what I mean by stop loss order. Then take profit. What is take profit? Take profit order simply means that setting a price at which your trade will automatically close to secure a profit. Now you are doing a business, you have already set a profit that this is what I want to make on this particular product that I'll buy. So whenever market was able to reach that particular level that is your take profit, you will automatically close that position or sell that product. That's what I mean about take profit. So whenever market gets to that your take profit, maybe you are risking $10 and you are targeting like $100, that is times 10. And once market gets to that level that you have set as a take profit, the trade will automatically close and secure your $100 profit. So that's what I mean by stop loss order and take profit order. So without wasting time, let's get to managing risks. So managing risks. Now, what is managing risk? Now, inside this managing risk, which I've already talked before, I'll talk about stop loss order. I'm talking about stop loss order. So we're going to talk about position. Talking about position sizing. Talking about position sizing. So you're going to talk about risk/reward. Risk/reward. So what is I've already explained stop loss order, which I said before, automatically close a trade at a particular level to not exceed lose your losing amount that you want to lose at that particular time, which is managing of risk. So position sizing. Now, what is position sizing? Now, position sizing simply means that deciding how much to trade based on your account size and risks to tolerate. Now, position sizing simply means that if you have an $100 account, let's say I have an $100 account. Now, this is my balance. This is my starting account, which is my account balance at a particular time. This is what I deposit. So position sizing simply means that on this my $100 account, I can say that in order for me to lose everything here, I want to have like 20 consistent loss for me to be able to blow up this account. So it still means that what I want to be risking per each trade should be $5 and it should not exceed $5 because $5 times 20 is going to give me $100. So now I've positioned myself that on each trade I should not be risking more than $5. That's what I say position size means that like deciding how much to trade based on your account size and to risk and your risk tolerance. You get, so we also have risk to reward. Now risk to reward simply means that planning trade with a favorable ratio for high potential reward compared to potential risk. Now risk to reward simply means that now this risk to reward it depends on the strategy that you are using, or it depends on the system that you are using. Now there are some people that they are using 1:3. There are people that are using 1:10. There are people that are using 1:20. Now 1:3 simply means that they are risking 1% to make 3%, or they are risking 1% to make 20%, or they are risking 1% to make 10%. It simply means that if I'm risking $10 with 1:3, I'm targeting to make $30 as my profit. If I'm risking $10 or 1:20, I'm targeting to make $200 as a profit. Now this depends on the system that you are using. That is how you can able to calculate your risk to reward. Your risk to reward. So you're able to get a good risk to reward that if I take a numbers of this trade and this trade, I should not be able to lose more than this, or at the end of it all, I will still end up at profit. So next thing, what we're going to be talking about now is type of Forex traders. Type of Forex trader. Now inside the type of Forex trader, we have one, the day trader. We have one day trader. Then we also have what we call the swing trader. We also have what we call the position trader. We also have what we call the position trader. Now, what is day trader? Day trader simply means that day trader which they trade currency within a single day. Now day trader trade currency within a single day, avoiding overnight position. They rarely on the technical analysis and aim to make profit from a short-term price movement. Now let me break it down. Now day trader, they are traders that usually they can open a trade in the morning and they close their trade in the evening, or which is like their trade they don't usually hold trade to the next day. They can just open trade at 1:00 and close the trade at 3:00 once they have seen the profit, or once they have worked their on profit. You get, so there are day trader wishes. Their more focus are on the daily daily price action. That is their major focus. They are not holding trade for like 2 days, 3 days, 1 week, 1 month. No. All the execution, all the trade that they are taking on Monday, they are going to close all the trade that same on Monday. They are not holding trade to the next day, which they analyze the market using the daily candlestick, like that same day, analyze the market, looking for a clear price action, take the trade and also close the trade and that. Then when we come to the swing trader, these are people that hold position for several days to weeks, capitalizing on the medium term trend. They are a combination of technical and also fundamental analysis. Now, swing traders feeling is that these are people that can hold trade, like they hold trade for weeks, they hold trade for days, like they hold trade for a longer period. These are swing traders. They also have the position traders. Now, these position traders, they hold trade for months, month to year, focusing on a long-term trade and also fundamental factor. Position traders, these are people that can hold trade for months to year, like there are people that are that they are currently holding trades in January down to November, and these people are position traders. Now let me break it down. These people they close trade, they close these people close trade within a day. Let's say they close trade daily. Now these people they close, let me say they close trade weekly. Now let's say these people they close trade monthly slash yearly. So this is where we're going to end today. So if you have any question, drop it on the comment section. And if this video worth your time, click on the subscribe button, like this video, drop your comments, share to your loved ones. Like I said, this is episode 2. I've done the episode 1, which can go back and watch. You can. What I say is that I want to take you guys from beginners to advanced. I'm going to drop this video on my YouTube page, my TikTok page, and also my Facebook page as well. So I'll see you guys on my next video. Do well to subscribe. One love. Peace out.